Great. So that was Dr. Jane Thomason, who was very kind and contributed just a little bit of background for all of us to take into the next few sessions where we hear from some more exciting people. And the next person who I'm very excited to introduce, we've got Mr. Julian Sawyer. So he has worked in a variety of roles and is currently working at Gemini. He is heading up the efforts for Europe and the UK, and he previously was a COO at Starling Bank, and he was also a co-founder. So let's please welcome Mr. Julian Sawyer. Thank you very much for being here, Julian. How are you doing?
Hi there. Yeah, very, very good. Thank you. And I was very impressed with Jane having to explain blockchain in about 15 minutes. So I think she's done a great job today on that.
Yeah, it was definitely not an easy task, but she was very kind and generous and managed to get it done.
Indeed.
So,
well done for her.
Just to quickly, I suppose it would be nice to know. Yes, thank you for her. But how would you introduce yourself, I suppose, to people who are learning of you for the first time? How would you characterize, I suppose, in a relatively brief fashion, your background and where you are now?
Yeah, I guess I'd probably describe my career to date as in three stages. I was a management consultant when I finished university, working in people like Accenture and Ernst & Young. Then I set up my own consultancy. And then I had an amazing opportunity to join Starling Bank as a co-founder. And I was there for 4.5 years as chief operating officer. And that was going from, helping to fundraise, to getting the banking license, recruiting our first person, all the way to about 700 odd people when I left last year. And then I pivoted again to the third stage of my career in going into crypto and joining Gemini. So Gemini is a US based crypto exchange. And they wanted to go into Europe. So they've asked me to head up our European operation.
Mm-hmm. I'm kind of curious then, what was it that, originally management consulting is quite a different ballgame from something like Starling Bank, right? It's this like challenger, almost tech company-like culture. And then jumping from there, even almost further left field into something like cryptocurrencies. What was prompting you to make these progressive changes further into the more, I guess, extreme in terms of innovation fields?
I think if you look at consultancy, I think it's probably a young person's game. So I think I'd probably spent enough time in that industry. I also wanted to do a proper job. I wanted to go onto client side. And so it was the right opportunity at the right time to engage at Starling. I think if you look back at Starling when I started at 2015, everybody said, look, you're crazy. No one starts a bank. No one does current accounts, etc. And you're trying to build something on new technology that's never been done before. And now that statement sounds pretty hollow when you compare, Revolut, Monzo, Starling, and the success that those organizations have had. If you look at where we are with crypto, I think we are in a position where we've got three moving parts that are coming together at exactly the same point that we were in 2015 with challenger banks. I think the first one is that the regulators are starting to engage and are being engaging with the industry. So this isn't something that they've just pushed down the road. This isn't something they've ignored. They are absolutely engaged. And whether that is central bank digital currencies or whether it is about authorizing the likes of Gemini to trade and providing protection for consumers and everything around that, but they are engaged. What we've also got then is institutions, so financial institutions who are moving blockchain, and I'm using that word very particular, and then the cryptocurrencies that sit on the blockchain, as Jane was talking about earlier. But they've moved that from being in their innovation lab or in their technology function to people who own the P&L. And that becomes really interesting. So what we're seeing is institutions that might not have embraced blockchain and Bitcoin and everything before that are now embracing. So, even in the last few months since I've been at Gemini, we've done things with JP Morgan, State Street, etc., which is proving that or giving us that proof point that the institutions are starting to look at that. We all know that institutions only do that when they've got customers you and I, consumers and pension funds and asset managers, wanting to do something within this asset class. And so that is the third element. So we've got regulators, we have institutions, and now we've got consumers, the likes of you and I and everybody that is here tonight, who are starting to think about this as an asset class. And there are three use cases here. There is one which is, I want to trade at an asset that's moving, it's volatile, I want to trade, I want to use it. There's another group of people that say, I want to invest. Okay, it's one of the highest performing asset classes in the last 10 years, so let's put some money in some of these. And the third one is, I want to use this for payments. So if I back up to the original question, I think what we've got here is that these three different forces are coming together, creating what I call the perfect storm. And if you don't have all three, you don't have consumers, then the institutions aren't interested. If the regulator's not doing it, the institutions aren't going to engage. And that, I think, is a pivotal moment. So I think 2020, even though it is and is going to be an incredibly challenging year, is starting to see that pivot, is starting to see this coming into mainstream, in the mainstream conversations that are happening. And that's what we are really excited about, that we try and, I think in fintech, there's a real danger that you talk within the fintech bubble. And you talk to everybody else in fintech and you get really excited, and you look at the people, our parents, our friends who are not in the fintech, and they go, don't understand what you're talking about, just don't get it. Okay. And what I think we want to make sure is that we are talking to people outside that bubble. We want to be talking to, can I say, the normal people, but people who are not absolutely engaged in fintech, who are curious about how to manage their money, but not curious about the technology or the underlying pieces. And I think when you look at something like a Starling or a Monzo or a Revolut, you are now talking about that mass market. You are talking about people who are not engaged in fintech, who don't live in Shoreditch, who now have got these accounts and are banking with these organizations. And I'm seeing where we are with cryptocurrencies, exactly that same pivot point is happening. And that becomes really, really exciting, I think, for us.
Mm-hmm. I'd love to jump on what you're saying. I'll definitely want to circle back around and touch what you talked on when you talked about before about the central bank backed digital currencies and also about regulation. But now that you've just brought up that this year is going to definitely be exciting, and given that this is the cryptocurrencies post-COVID session, I'd love to touch on actually something that Dr. Thomason said. She said that in her eyes, the pandemic is actually having the unexpected consequence of pushing people to adopt these kind of technologies faster and pushing this more into the mind of the everyday consumer. Would you agree with that? Do you think the pandemic is having this sort of effect?
I think absolutely yes, with a slight caveat here, which is I don't think it's going to solve today's problems right now. Okay, in my mind, whenever you have a time of crisis, whether it's a pandemic or a war or something like that, technology accelerates at a exponential rate, and therefore what we're seeing is lots of things happening. I think a comment, it's not a statistic, but the NHS has changed more in the last 10 weeks than the last 10 years. Whether that's true or not, but it does for effect give you some huge amount of change that has happened across a whole range of different industries. So without a doubt, there is new technology coming out, there are more use cases. And I think what we are seeing is that this will be a point when post-COVID that people will start to engage. I think they're going to do, I think from a personal perspective, I think there's going to be two major things that are going to happen. And if I just take out those outside of crypto, and then I'll apply it into the world of crypto. So what I think is going to happen is, first of all, that consumers are going to save a lot more money than we have in the past. In the past, we didn't really have enough for the rainy day, and we now know what a rainy day can look like, and it is weeks and weeks and weeks. Okay, and so we probably all need to have a little bit more saving. Secondly, I think there is going to be more acceptance that the government or governments can't keep stepping in, and therefore I need to manage my own money. And if I'm saving some more, I probably need to invest part of that savings rather than just put it in a savings account, particularly with incredibly low interest rates. And therefore, what I'm going to do is be more interested in money, what I'm going to do with it, and managing that. Now, for us, on this forum today, that means fintech. That means people engaging with various different products, which can include cryptocurrencies, but it will include a whole range of other things. So I think what we'll see is people who have just put their savings into a savings account and didn't really worry about it are probably now going to start to engage a little bit more into what's that money doing. Is it being productive for them? Are they getting a good rate of return? Are they getting the growth that they require? Because they do need to require it. So I think what we're seeing is, yes, a greater use of technology across a whole range of areas and cryptocurrencies. I don't think it's going to solve anything this year, but what we are going to see is a huge consumer change in money. And therefore, cryptocurrencies, Bitcoin, blockchain, etc., has a role to play in that.
Mm-hmm. Okay. So people are going to start thinking about what are the different ways, rather than people who've always been comfortable leaving their money in the banks. Now that the rates are all the way down, they're going to need to start thinking about other ways to save up for the next rainy day, now that they, have lived through one. Okay. That's an interesting perspective. And do you think, just kind of quickly following up on that, do you think that that's going to draw people to services such as the ones you provide at Gemini? Do you think people are then going to start looking directly for exchanges and for ways to directly start engaging with these markets?
I think if I was in a sales mode, I'd say absolutely yes. But if I'm in more of an industry commentator mode, what I would say is that I think what people will start to look at, and this is just good investment advice, and I'm not providing advice here, but you need to diversify your assets. You need to be in some very, very stable assets, cash, gold, and you need to be in some more volatile, higher growth assets as well. And that is a known approach to investment management. What I think can happen, and what will happen, is that people will use part of their portfolio in crypto assets, because it has had a huge growth in the last 10 years, as well as putting some money in cash, putting some money in some stocks, putting some money in ISAs and other efficient ways of saving. So and this is what I think is really interesting about our industry, that what we've got is a lot of evangelists who are constantly talking that Bitcoin's going to change the world, etc. What we have got, what you and I have got, is we've got a Visa or MasterCard in our purse or our wallet. It works. We're using faster payments or backs or chaps to pay our gas bill or to get some money or pay our rent, etc. We have a number of things that work, but we also have a number of inefficiencies in the payments world. FX, sending money overseas to family members, paying bills overseas, etc. is just one example that can get better. And so what I think we will have is this pie chart, which has currently got Visa, MasterCard, bank-to-bank payments, peer-to-peer payments. There will just be two things will happen. One is some of those will get powered by blockchain technology. And secondly, there will be a new wedge in there, which will be Bitcoin or Ether or whatever. So it's not, I don't think it's just going to be something that's going to suddenly take over the world. It's going to just grow in significance. Now, why is this important? This is super important because we as an industry get too ingrained in the technology. We talk about blockchain, we talk about hash rates, we're talking about halving, etc. As a consumer, I don't care. I care it works, and I care it is secure, and my money is in an exchange or a custodian which is super secure. That's what I care about. Is my money safe and secure? I don't care the mechanics of that. Just the same as you don't care the mechanics of how, when you buy a coffee in Starbucks, how do they get their money when you've done a contactless or you've done an Apple Pay? You don't care. You've got you've money has come out of your account. You're okay with that, and you've got your coffee. That's all you care about. So I think what we've got to do is communicate into that world, and I think that's where consumers will be starting to think about this is an asset class to use and an asset class that they want to invest or trade in. And I think that is where what we want to do in Gemini is to change the narrative a little bit and to ensure that the narrative is engaging to consumers, not trying to baffle them with technology.
Mhm. Okay, I think that's definitely an admirable goal. I know personally I have a lot of family members, particularly parents and grandparents, who I say, "Oh, I'm really interested in fintech," and they're like, "Who is that?" So
What's
very
one of those?
admirable.
Yeah.
Exactly. So you did talk a little bit about how consumers are definitely going to be looking, especially as they delve into this kind of area for the first time. They're looking for security. They're looking something they can trust and something that they know. And earlier you spoke about central bank digital currencies. And I feel like if there's anything that a consumer is going to trust as a first place, it's something that the central bank has said, we're backing it. We know it. We're saying it's legitimate.
Mhm.
Do you think that that's going to be definitely a big point moving forward? Do you think consumers are going to look towards central bank digital currencies, and we're going to start to see adoption of this kind of technology?
I think without a doubt, it is something that can only help the industry. I think the way that I think about this in a very simple way is blockchain is the technology and Bitcoin or Ether is the application on that technology. So I think iPhone is blockchain and the app is a Bitcoin or Ether or whatever. So what the central banks are doing are creating apps on technology. So the first thing that's doing is giving absolute credibility to the technology of blockchain. Okay, that is absolutely critical. And I think for those of us in the financial services industry, that is now an accepted set of technologies that is secure and reliable and resilient, etc. What we now have got is the applications of that. And so I think as people will hear that the Bank of England or the Bank of China or the Fed is doing something which is using this blockchain technology, that inherently will give people that comfort that this is good technology to base their financial use on. What you then need to do is then decide what is the application of that. So that is when you look at a Bitcoin or Ether, as I mentioned. Now, the central banks will not be using those applications. They'll be creating their own GBP version or US dollar version, etc. But it's the underlying reassurance that if the governments are doing this, if the central banks are doing this, if my currency is doing this, if my currency where I get paid my salary is doing this, then why can't I do it? So we think this is super important. I think it has a greater impact on the institutions than consumers. Because again, I think it's hard to explain this. And a lot of the central banks are working out what they're trying to achieve here. Are they just doing an electronic money version of their existing currency? Are they doing true cryptocurrencies? Are they creating a different currency to their base currencies? And I don't believe many or any are doing that. So there's lots of different use cases here, but it's all based on the same technology. That's got to help. The institutions will be looking at that and going, if it's good enough for the Bank of England, it's good enough for us. So how do we engage? And our role in Gemini is about creating a piece of infrastructure. So we effectively are an infrastructure play that matches people who want to buy and people who want to sell and put that together in a very, very secure, very, very high speed, resilient infrastructure. That's our job. So we're like the London Stock Exchange. You probably have shares. You've never engaged with the London Stock Exchange because you've engaged with other people, whether they're fintechs or brokers or whatever, to buy some shares, etc. You might have even just done it through a pension or through an ISA. And that's super important, that our role in Gemini is to be that person or that company in the middle that is helping create a market within a digital asset.
Okay. So it's probably something that we might not see as consumers directly, but it's definitely going to be there allowing us to, make the transactions and the investments that we'll be interested in making. Okay. That's it.
Yeah, I mean, I think if you look at the Bank of England, it has two major payments systems. One, it took over the CHAPS payment infrastructure probably 4 or 5 years ago now. And we know that CHAPS is used for very large payments, but it also has RTGS, which is the real-time gross settlement system, which is where the banks move money between themselves. And we're talking, billions in a transaction, not just what you and I want to pay each other. So we're talking a huge infrastructure that you and I cannot get to RTGS at all. It's absolutely closed, and it's only there for the very biggest banks. And so therefore there is this whole infrastructure that the Bank of England doesn't have to explain to you and I, plus also it is there for a particular use case. And that is, I think, where that use case will be, and it will not be a consumer-led initiative.
Mm-hmm. Okay, so it's going to be institutions first. And I suppose along these lines, if it's going to be the institutions playing the biggest role, then I guess regulation is going to be absolutely central to how this ends up playing out.
Yep.
And I'd love for you to talk about some of the regulations happening in this space. I mean, I don't think anyone is going to be surprised to hear that finance and financial services is one of the most aggressively regulated, industries in the world. But specifically cryptocurrencies or a cryptocurrency exchange, there's a lot of fast moving regulation in this space. Like we've had already this year, the 5th money laundering directive that came out, that was implemented now earlier this year. And then the 6th one is going to be happening at the end of the year. So it won't even be in place for a full year before we're moving on to the next one already. So, what's changing between those? What was happening in the first one that needed to change for the second one? And should we expect the next one in the next few months? I mean, how is this looking if it's so fast?
So I think I want to address this in a slightly different way. I will come back to your direct question. I think when you look at the exchanges, and there's a whole range of exchanges in the world. If you look at someone like a Crypto Compare who ranks all the exchanges, and you look at the AA exchanges and the A-rated exchanges, and then there's Bs and Cs, etc. Only 1/3 of transactions of crypto are in the As and AAs. So therefore, the exchanges that are seen to be good, strong, robust, secure, everything that we all think we want to keep our money, only has 1/3 of all the cryptocurrency transactions. So what we have to do as an industry, or all those of us who are AAs and then all the A exchanges, have got to educate everybody about why you're putting your money, why are you trading in something that is not secure. Okay, so that is really, really important. I think if we then look at regulation is there for protection. It is to protect consumers and institutions, and also financial stability, the market's stability, from things going wrong and bad people and bad actors playing in this space. So we at Gemini absolutely embrace this as what we need. We're regulated in the US, and we're applying within the UK for that process. We see this as what I would call a hygiene factor. You should not have an exchange if it is not belt and braces from a regulatory perspective. And I think over time, consumers will be educated. We need to help and inform what good looks like and what not good looks like. And so regulation is critically important. Now, I think when you look at this from a European perspective, I think the piece that we are, as a European Union, and we can still talk about that for a few more weeks and months, what I think we have got a slight challenge on is their interpretation and implementation of the 5th Money Laundering Directive is not the same across all markets. So Britain has implemented 5MLD on the 10th of January this year. There are some countries that haven't. Other people have incorporated it in a different way or interpreted it in a different way, maybe going deeper or maybe wider to the problem. And what we, I think, would welcome, and we can't have global regs, we know that, but we want to try and get good regulation that is consistent across all markets. Because if you haven't got that consistency, what you're going to have is those exchanges going to the weaker environment where they can continue to trade, where consumers don't understand that that country has a weaker regulatory perspective, even if it's in the European Union, as opposed to another country. And so I think there is an education perspective on consumers, and there's an education and a lot of activities which we are playing our part in as well, with the regulators, with the trade associations, both in the UK and across Europe, and also obviously our colleagues in the US spend a huge amount of time on this, really trying to help understand and inform. This is a new industry in a very established and, as you said, very well regulated. And what we need to know is to fit into that world and be more like the regulated world. We absolutely support that. And yes, 5 MLDs come in, and there'll be 6, and there'll be 7, and there'll be 8 MLD at some point. It's part of the joy of working in financial services.
It definitely sounds like a joy. All right, so today is quite the packed timetable for us. So
Yeah.
Unfortunately, we weren't able to ask as many questions as I think I would have liked, but hopefully we'll able to have you come speak for us again later on during the academic year. That would make us very happy. I've personally found this very interesting. But now if you can just leave us briefly, if you have any thoughts you'd like to leave students who might be listening, or young budding professionals, any thoughts that you think, this is something I want people to come away with, maybe about cryptocurrencies, maybe about the space in general. Some final.
I think the thing that I think is, we talk about fintechs, we talk about banks, we talk about crypto. Don't put them into 3 buckets. They're one bucket. They are financial services helping consumers manage their money better. And that could be through a better customer experience like Starling. It could be through more products that a HSBC or RBS would have, or it is about different asset classes with crypto. Don't put them into separate buckets. They are all one. And think of them as a holistic set of how we can make financial services better and more accessible to people. Crypto has a big role in that. So does fintech, and we've seen a lot of that in the past few years, but also the traditional banks. So when we talk about financial services, include fintech, include crypto, and vice versa.
Fantastic. Thank you so much, Julian.
I appreciate it. Thank you for your time
I'll
today.
definitely be looking forward to speaking to you more another day, because
Fantastic.
I think you've left some really interesting insight. All right. Thank you very much, Julian.
Thank you very much. Bye-bye.
Bye.